Sign up today.
The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the fantastic Friday, the July 17th edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary one. And the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we can go check on the circumstance of these markets. We're going to go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know I'm absolutely grateful for your presence here. But much more important than that, during this next 60 minutes, I'm here to serve you. So feel free to pick up that phone. You can dial on in, 877-927-6648. If you can't dial in, we've got you covered as well. You can always send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question. Any at our Tiger's Den? Well, any ping will do. So let's go ahead and get this show started on fabulous, fantastic Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to last show. Right now we got all the indices in the green. The Dow is the New York Stock Exchange. Nope, the Russell 2000 is a leader to the upside at 4%. New York Stock Exchange almost 3%. Interesting. Dow's up 2%, S&P about 1.8, and the Nasdaq is basically flat. It's up 0.1%, but it should have bottomed about an hour ago. I know you're going to say, "Oh, come on, Steve-O, how in the Sam heck can you say that?" Well, we just take a look at the NQ here, and we take a look at the patterns. So here, now this is the NQ. This chart here shows the opening ranges on a couple different things. It shows the opening ranges. The opening ranges that are solid in black represent the opening last night, so 6 to 6:30. And then I've just added to this tool here the opening range of the cash market, which are these little red dashed lines out here. Now, with regard to why did the market top when it did last night? Well, it hit that TD9 count. So it was bar number 9 that made the high out there. It's the easiest pattern in the world to be able to teach you for whatever time frame it is that you want to monitor. And so if you'd really like to learn the details about the pattern, just go sign up for Mastering Probability. And there's several workshops that you can archive, especially during this time period where you may have a little extra time on your hand. So, hey, the NQ top with a TD9 count. Now take a look at the low of today, this morning, using that same 30-minute time frame. And guess what? We've got a TD9 count. And that TD9 count is occurring before support, breakout support. So this 9 count that we've got out here had created a support level of 86.40.50. And as long as price get back inside, we'll call it the opening range of the cash session. We're almost there. I'll tell you what that exact number is. It is 87.64. So on a 30-minute basis, we can see it close above 87.64. Pretty good chance the NQ can make a run for the 88.71 level. It's about 110 points from where we're trading right now. But first, it's got to get back inside that half-hour opening range during the cash market from 9:30 to 10. So that's the NQ. Well, that just was a side tracking, or I don't know, wasn't side tracking, but since I had mentioned it, and I just happened to peek over to take a look at the 30-minute chart, I figured, well, hey, what the heck, right? All right, so we got the spot volatility index, trade below its 50-day exponential moving average, 38.91 is the print. Gold's off $32, currently trading below support, which I believe was, I can't remember. We're going to go take a look at it. I think it's 1706, but don't quote me on that. And then you've got, so breaking through that says we're going to see lower prices in gold. Of course, take a look at the end of day reading, because if it closes above support, and we'll go get that exact number for you, well, then that would be a different story. But closing below that says, adios, sayonara, sayonara, baby. Silver is down 29 cents, nearly 2% to the downside. The June contract for gold trade down to 25.15. That's the active contract. It's up 38 pennies. Natural gas up 7 cents. Treasury bonds are flat. Lead the charge dollar-wise to the upside. Booking Holdings, Transigem Group, Shopify, Chipotle, Sherwin-Williams are up 63, 46, 32, 26, and 24. So they're up nicely. To the downside, it's Amazon off $54, a little over 2%. Mercado Libre down 20, Netflix off 18, Nettie's up 16, Buckaroonies out here. So we have a bunch of requests that are in. I like that. That's a beautiful thing. And we're going to go basically right to them, right off of the bat. I've just created this little Word document so that when you guys, gals, ask me in the den for something, I can at least type it in over on another sheet, and I can try to keep track of this stuff for you. So in any event, let's get right to the first question. The first question coming in from Michael H. And Michael says, ENPH, please review support and resistance. So let's pull that up. And that is Enphase Energy out here, and it's trading right now. Let me do this here. Give me uno momento, por favor. I'm just going to do it on this chart. The heck with it. ENPH out there. So here's support and resistance. That's what you're asking for. So resistance, number one resistance level is going to be 40.51. That is the top of the daily profile. It hasn't been able to bust through it. You had one close above it. One close above it doesn't really blow my skirt up, so to speak. I need to see two closes above it in order to blow that skirt to the upside. So that was a false breakout. That was on a trading session of April the 14th out here. And so it's trading in between. Now, support is 30.42. This is a bullish structured profile. Can't bust them up. Maybe it's going to try to bust them to the downside. Last time price tried to bust at the upside, he did 4.7 million shares. Right now, you're at 2.3. So you're moving into that in a light fashion. If price was able to close above 40.51, Michael, for two sessions, then you would be taking a look at a move up to 47.85 out there. 47.85 would be the center of its weekly profile. Now, the real potential problem out here for Enphase Energy is that today could be a top. So you're up at resistance on the daily time frame. Oh, I take that back. So today's going to be bar number 9, but bar number 9 or 8 is not the high of this count out here. So reverse that tape out there. That's not the case. That is not the case. So another level of support is 36.33. That is Stevie's red line. And if price were to close below that, well, that's when you would be taking a look at that 30.42-ish area, the bottom of its profile. Let me just take a quick peek here for you at the weekly. What do we have on the weekly? So the weekly shows us that if this is just a counter trend rally off of the bottom, much like many of the indices out here, this is it. Because prices stopped, you can see on a weekly basis right at Stevie's green line out here. So I would say just be careful if you are long this. What's the question? I went long at 25. What price do you recommend to stop? Here's what I really recommend out here. Your stop needs to be $3.88 below where it's trading, let's say yesterday's close. Or 388 times 1.272 or 1.618. 388 is the average true range over the last 10 trading sessions. Steve Rhodes with TFNN. Be right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. TFNN is launching an open house for our Tiger's Den. For a limited time, you can get a 30-day free trial to the Tiger's Den. Just enter promo code OPEN at checkout and pay nothing for 30 days while you try out your Tiger's Den membership as part of our open house. With market volatility at an all-time high and people all over the world working from home if possible, TFNN is hosting an open house in our Tiger's Den. The Tiger's Den is an interactive chat room that runs all day where other tigers and tigresses discuss trading ideas with the hosts and members, along with charts and current market news, as well as live access to the charts the hosts use during their programs. Join us for the Tiger's Den Open House. Begin your Den membership today by just entering OPEN at checkout and pay nothing while you try things out for 30 days. For all the details and to start your Den membership today, visit the front page of TFNN.com. Don't miss out on the TFNN Tiger's Den Open House taking place now. Sign up today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. The number on gold is 1706.60. That's the number you're going to want to watch today. See it close below that. That is communicating to you and I that gold wants lower price. Let's go out to Philly and speak with John. John, thanks for calling. Thanks for holding. How are you today?
I'm doing well. Steve, how are you?
Very good. Thanks so much for asking. And sticking with the gold conversation, so to speak, we're going to take a look at the GDX.
Yes, Steve, I've got a very specific question for you, please. First, Tuesday, when GDX rallied up to and slightly exceeded 32, I booked a gain, and it was only because it was an obvious spot to think maybe there's a pullback starting on account of that was the late February high and also the high from 2016. Yes. Well, we've had a pullback, and it's just been, inconsequential, frankly.
Yes.
Steve, and I bought back in for what it's worth. My suspicion is we move back and exceed 32 and extend higher. But I'm wondering if you can share with us what your work says, what price we have to go below that says, John, you're wrong, it's not going over 32.
So, okay. So let's. Here's the chart, folks. I've tried to decorate it to show you what John is looking at. That way you can look at it too and to help us answer the question. So here, back on the trading session of September 4th, 2019. I guess I didn't go back far enough. You mentioned that was in the 2018 highs out there, I guess. But I'll just stick with the two most recent swing points. Or maybe you did and I wasn't listening clearly. But on September 4, 2019, you had GDX, folks, get up to a high of 30.96. Now, there were 48 million shares when that occurred. And then recently out here on February 24th, it actually passed and closed above that swing point with 87 million shares. And that would have been the indication that, okay, this thing was getting ready to move higher because it had passed a swing point. But the reality is the very following day, price got below that, and then it just simply continued to go lower during the coronavirus bottom. that formed out here. What transpired was now that swing point from February 24th that at 87 million shares was tested on much lighter volume, 59 million shares. So that was a test and a rejection of that level, and it was tested again yesterday, but 37 million shares. Now, it didn't close below the low of that session, the low of the session of February 24th, 30.66. You're trading below that now. Now, the interesting thing here, John, to support. So here will be the support of your idea that it's at least going to make another attempt for those highs. It's not doing it because of volume. This you've already proven. This we've just proven here. But there's a brand new profile that formed yesterday, and this profile formed below price. So generally speaking, that is a bullish message. When it becomes a non-bullish message is when the price gets back inside that. So you would be watching 27.75, although I doubt that's the type of room that you're actually giving on this trade out here. So the only piece of the bullish piece that I would have for you would be that a new profile is formed below below price out here. Now, we have a weekly profile that we are not, we have a weekly profile that we can look at. We also have weekly volume to test that spike. So the volume on the week of, that began February 24th, had 519 million shares. And it's being tested this week, John, with 203 million shares. Yeah. So now you're losing me. You're losing me on taking that trade to the upside, and price has tested and rejected the top of its weekly profile, which is 30.27. Now, it only becomes a problem when price starts to close below the center of that bearish structured profile, and that's at 28.71. But now we've got resistance that is held here. The other piece of it, and I know you asked about the GDX, but if I take a look at the XAU, here in the XAU, what this did a few days ago was this hit formed a TD9 count topping pattern. It was bar number 8. What I can also see on the XAU is that the oscillator and change line, Stevie's red-green line, changed from red to green a few trading sessions ago. There's a phenomena associated with that. I can't tell you why it works. I just know that it works and to prepare for it. And that is that over the coming sessions, I don't know how many, just the coming sessions, we should see price and that green line catch up to each other. Now, it could be a combination of price moving sideways, the line moving higher, price moving lower. It could be any sets of combinations. But what this tells us is that the move to the downside or the test of support really needs to take place. And then I would just say with regard to gold, and I mentioned this as we were opening the show, gold also has a TD9 count pattern. And when we have these topping patterns, folks, the first thing that I look for, because when we see a topping signal or a bottoming signal, our eyes should then immediately get glued on where is the first level of support. Because do sellers, in this case here where it has a top, are they able to bust through support? Now, again, take a look at the end of the day. If 1:23 in the afternoon is the end of the day, well, then this says gold is going to move lower because price is below the bottom of its box, 1706. So everything I'm looking at here, John, when I take a look at gold, I take a look at the XAU, I take a look at Stevie's green line, red line, and on the GDX, the same thing. I'll pull over the GDX chart. Also a TD9 count on bar number 8. You can see the oscillator and change line changing from red to green. And right now that's priced at about 27.54. So I say this goes, charts are saying, not me, are saying that price moves lower before it can try to move higher again. That's what I see.
28.71, that was the midpoint of the weekly profile. Was that it, right?
Let me pull that open here for you, and we'll pull that back up. And the weekly profile, 28.71, correct.
Great. Excellent, yeah. Steve. I appreciate it. So I'm now prepared to be proven wrong on that, and I've got the numbers, so thanks a bunch.
Okay, you bet. Hey, John, thanks so much for calling, and have a nice weekend. Let's go out to Bob in Massachusetts. Bob, thanks for calling. Thanks for holding. How are you doing today?
Thank you, Steve. I'm doing fine. How are you?
I'm doing well also. And is it natural gas that you're calling about?
No, Nova Gold, NG.
Nova Gold. Okay, well, glad that I asked. NG could also be used for natural gas. So tell me what you're doing inside of Nova Gold and how I can help.
I got in around $9, and I was wondering what an exit point would be.
Looking for an exit point. Okay, so we take a look at Nova Gold. It's possible that your exit point should be, today or would have been yesterday. Let me show you the reason why out here. So it kind of goes along with the discussion that we just had. So we don't have to really break apart the mining sector because we took a look at the GDX, we took a look at the XAU, we took a little bit of a look at gold out there. And so when I take a look at Nova Gold, one of the patterns, there's several patterns I look to for tops or bottom signals out here. One of those patterns to the upside or downside would be the TD9 count. And on a TD9 count pattern, it would be bars 8, 9, or the bar following 9 that could identify that top. Well, yesterday was the bar following 9. Now, although I don't have the tool on NinjaTrader 8 to draw my A to B equals CD to the upside, it's very clear that we can see that. And it looks like this was probably a 1 to 1.272 A to B equals CD. What completes an A to B equals CD pattern is a bearish reversal candle. That's what we now have today, the Three River Evening Star. So if you're asking me would I exit this trade now, the answer would be yes. If you don't, price is likely to pull back to about the $10.30 area. Hey, you can hang on, Bob, through this break here, and we'll be right back, and I'll answer any other questions that you have. Steve Rhodes.
Okay, thank you very much.
You bet. We'll be back with Bob in Massachusetts in just a few. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We're looking at Nova Gold, ticker symbols NG, with Bob in Massachusetts. Hey, Bob, the other pattern that I drew up on the screen here, I don't know if you listen to any of Larry Pesavento's work, but he's the king of the butterflies. And what Nova Gold is confirming today for you is a nice butterfly cell pattern. Now, the reason why I say it's confirming it today is because for me, when you take a look at an A to B equals CD pattern, which this had, you've got to wait for, you don't have to, but I would suggest that you wait for a bearish reversal candle. In this case here, it's this candle, the Three River Evening Star, requires 3 candles. So it was yesterday's, today's, and the candle that showed up on Wednesday. So you got the sell signal and price. The first level of support that price should move back to in Nova Gold would be my oscillator and change line that's currently priced at $10.31. So what additional questions do you have after that analysis?
Just one other stock, GFI.
Oh, GFI. Okay, so let's take a look. That's Goldfields Inc. out
That's
here.
correct.
What's that?
Yes. No. Did you have the correct same name?
Yes. So you got the same basic pattern out here. TD9 count. This occurred 4 days ago. My oscillator and change line was red, then turned green. That tells us we've got a meetup of that. Price is trading at 630. Price should move down towards that 602 level. If you get a test and rejection of a green line, then you can take a look at a move back to the upside. That would be a bullish signal. If price closes below 602 on that test, then you're looking at a move down to 555 to 576, and below that, 495 would be the number.
Okay.
All right.
Well, thank you very much. You really informed me of a lot of things that are happening.
Well, you bet. Thanks so much for calling. Have a great weekend and stay safe out there. We've got Al on the line from Winter Park. Al, thanks for calling. Thanks for holding. How are you?
Good. I had a question. I've been looking at buying the dust, and then I compared that to NUGT, Nougat, and I can't understand why the NUGT's pattern is beaten up so bad. I don't see a split in here.
Wow. So
they should be opposite. Yeah.
Yeah. So I guess. So these are the triples out here, and each day they reset. So, if you're going to look at, here's an example. Well, let me try to do an example for you, just out of curiosity. So you're asking a question, and if you've got a question, so does somebody else. So let's do this here. So I'm going to put up the GDX, which is going to be the 1X, and then let me insert a symbol here, and I'm going to insert the nugget, which is the 3-time, which is down below. And no, you know what they did? They did do a reverse of some sort. They did. I think they went from, I don't know how that worked and how that affected the charts, though. They went from a 3-to-1 to a 2-to-1, I believe. So you're not going to have that same. You're not going to have that same type of moves. But I don't know if the chart has been reset though to reflect the 2-to-1, and it may. So I want to be careful with that. But so is the question just, hey, what's going on with Nugget when you take a look at it?
Yeah, I mean, you would think it would be reversed from dust.
It is reversed from dust. It is. So Nugget is the bull, and dust would be the bear version of it. So here, I'll put in another symbol. Let me insert the symbol of DUST, and let that pop up on the screen. And it is the opposite. It is the bear version of it. So are you looking to be long or short the miners?
Yeah, I'm thinking that they're going to fall. So yeah, I'm going to be shorting it.
Okay, so then dust would be one of the vehicles that you could use to do that. The other is you could actually go ahead and sell the GDX out there. So I see the trade. I mean, we just have had a couple of callers out here. We took a look at gold. I would say at this stage you're not in the trade, right? So you're not in the trade.
No, but I'm getting soon.
Okay, so the soon would be, since you're waiting, my suggestion is wait to see where gold closes today. Because if gold doesn't close below the bottom of its profile out here, which is 1706.60, if it does not close below that, in other words, it closes above that, you don't have a clear signal to take a short. If it does close below 1706.60, then from a directional standpoint, so the miners directionally, generally speaking, the miners and gold will move in the same direction. So if gold can bust through support, and then based on everything else we looked at with regard to the GDX, Nova Gold, GFI out there, it's saying that there's at least more of a pullback to take place. And
okay, good.
Being long dust would make sense. Okay,
all
does
right.
that help?
I'll be patient. Thanks. I appreciate it.
You bet, and thanks so much for calling. I was Al in, I think we're in Winter Park somewhere. Yeah, Winter Park, Florida. Beautiful area of the country, or of the state of Florida. All right, so let's go to, we've got John in Orlando. John, thanks for calling. Thanks for holding. How are you?
Good. How you doing, Steve? Everything okay?
Everything is good with me. Tell me what you are looking at, what instrument you'd like us to pull up, and how can we help?
Well, I'm thinking that the market is taking a bounce here for the last probably 15, 16 days, and I'm thinking to short the S&P and the Dow. Am I too early?
Well, are you too early? For me, well, so okay, let's see here. Let's do this. Let me pull over the futures contracts, and let me just show you the patterns that are out there. Are you an aggressive? Here, the easiest way for me to answer that: are you an aggressive trader? What's your natural style? Are you aggressive?
I'm very aggressive. I do the three times S&P down, and three times S down.
Okay, so I'm going to give you if I can get this to work here, I'm going to give you the aggressive. Well, what the heck is going on with my system? That's a bummer. Okay, so I've got to go to game plan B. Don't worry, I always have a game plan. Oh, I think we're clear now. Okay, so let me pull this over here. The reason from an aggressive trader standpoint why you could take this trade now, and actually it's almost not being that aggressive. Today's going to be TD is going to be bar number 9 of a TD9 count. We know that tops can form bars 9 or the bar following 9 or bar 8. Well, this is the high inside the ES Mini today. It's made a 1-to-1 A to B equals CD. And if it can close below, I'm going to give you the number in a moment. If it can close below today, 28.46, and you're at 28.41, there's already a Gartley sell pattern that formed out here. And this formed a couple of days ago when it created a bearish dark cloud cover. So that combined with closing back below that resistance level and the mere fact that this is going to be bar number 9, I would say, yeah, go ahead and take the short in the S&P then, because you're an aggressive trader. And if you see a close above today's high, then you were too early, and price might be making its way up to the 30.12 or 30.28 area inside the futures marketplace. The Dow, which you were asking about, the Dow has not completed an A to B equals CD to the upside. Therefore, I don't have, when I say don't really, I don't have a clear sell signal inside the Dow. We would need to see the Dow futures close below 22,757. That's not going to happen today to get that confirmed signal. But do me a favor, hold on through this breakout here. We'll come back and I'll answer any other questions that you've got. Steve Rhodes, TFNN. We'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get the competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We're on the line with John in Orlando. We're just taking a look at the markets in general. John is interested in going short the markets. We were taking a look at the S&P 500. Now, one of the caution signals about taking that short right now is what's on my screen here, John, are the market breadth profiles for the S&P 500 for 5 different time frames. The shortest one would be the 30-minute time frame. And then on the upper right-hand panel, if you're watching us on Tiger TV, I've got 60, 240 daily, and weekly time frames. And all of those are actually in the bullish mode out here, meaning we have more issues trading above resistance versus issues trading below support. So therefore, that being said, if you've got a hankering to go short, and it sounds like you do and you're aggressive, the short that you would trade, and this way I get to kind of kill 2 birds with 1 stone because S&P and our Tigers Den wanted to take a look at TZA, the short that I would recommend you trade would be the Russell 2000. You see, the Russell 2000 the Russell 2000 has already confirmed a Gartley sell pattern. And it was really kind of a minor one. It was about a 0.382 by Gartley sell pattern out here. And the top of its profile is 1265. And that would also be a resistance level. So I think this would be the more logical one. And think of it like this. What businesses are likely to just totally get trashed even when the economy starts to recycle out here? Small businesses, right?
Small, yes.
Yeah. So they're the ones that are going to get hit the hardest during a depression, which is what we're going to see. There's like not even a doubt about that. But that's neither here nor there. The best trade setup for you from the short side would be the Russell 2000, in my opinion.
I see. Okay, that's good information.
Okay.
If you can look at it for me, I'm sorry, one more, Walmart. I like the foot traffic in that store.
Sure.
For the chart on it.
Who doesn't, right? We'd all like to have a Walmart. But but let's go take a look at what Walmart is doing. WMT out here. How is this trading today? You know, it's up above daily, weekly, and monthly resistance levels, those being their TAS market profiles. But what is it you're wanting to do here with Walmart?
I want to go this one conservative and go long term.
long term. So, okay. So I'm going to have to answer the question for you this way. Keep your hands in your pocket for a long time. My take on these markets are that this is just a counter trend rally. The bottom that we saw, nice bottom as it is, we're going to call that the coronavirus bottom. But there's two total economic issues that are transpiring in our country. There's the coronavirus bottom, and then there's going to be the GDP bottom. And that GDP bottom, I'm not sure when it's going to take place. I know it's not taking place right now in the month of April. I think we're in the month of April, right?
Usually the worst month of the year is October. The most downside to the market is October. I mean, this is a guess.
Yes. But so I wanted to just simply, you're asking about a long-term trade in Walmart, and it's performing well, and a lot because of the current economic conditions or what have you. But as far as the long-term trade, I also want to get the market correct. Now, look, I may be just totally out of my mind. That's okay. The only way that I'm out of my mind would be not doing the research, and I've done the research. I've done plenty of research out here to try to help all of our listeners, you, subscribers, everybody. And we are just entering economic winter. We're just entering economic winter out here. And I don't know how long. This could be a winter that lasts for a decade. Literally a decade out here. You go do the research yourself. You'll see that small businesses represent the majority of our workforce. To the GDP, they add about 47%, I think, something like that. Was the last 43 to 47% out here. They're truly critical, and I believe that we're going to take out the lows of March, and that the Dow is going to head down to the 15 to 17,000 level. That's when I'd like you to take a long inside of Walmart out there. Do it when we get
what is your opinion on the GDP? You think it'll be like about 8 points down?
No idea. You know, I mean, it's a government number that's out there. I really don't know. I just know that markets will not make major bottoms until GDP bottoms, and we're that I don't see that taking place right now. The only thing that gets in the way of that is that something just starts going haywire in the emerging markets and the European Union. And that's a real possibility, too. And if we start seeing things going haywire there, then where is it that capital is going to go? You think anybody's going to put their capital in China? Is anybody going to put their capital in Japan? If you can't put it in the emerging markets and you're not going to put it in Europe, where are you going to go? It's going to go to Australia? No, it would come
US
here.
All the way.
It'll come here. So I do recognize that the one thing that gets in the way of that pattern is that everything goes to hell in a handbasket, and that is a real possibility. But when we see that taking place, then we'll know. We'll see the capital flows coming into the U.S. marketplace out here. When I take a look at capital flows since our bottom out here, the money's being equally distributed everywhere. This tells me that large money has not decided where to go park itself. That's why this is just truly a counter trend rally. The Dow is up 28%, the rate of change. You've got the United Kingdom is up 25%. You've got Canada up 30%. You've got India up 25%. You've got Germany up 23%. And Germany's in a world of hurt. So this is just a worldwide counter trend rally that is going on. And longer term, the markets are headed much further south. And the only thing that gets in the way out there is that everything falls apart over in Europe. And then I'd have a different picture and a different outlook.
I agree with you. I agree with you on that. Yes.
Okay. So,
all right.
So that's the big picture. You bet. Thanks so much for calling. Let's go out to Tony in San Diego. Tony, thanks for calling. Thanks for holding. How are you today?
I'm doing well, Steve. Thank you for taking my call.
Sure. My pleasure.
I just listened to what you said, so this question is probably, and I can't disagree with your long-term view of the market, but I was in an individual stock, and I got lucky on it, but I had a real small position, and I sold it, and I'm looking to get back in with maybe more. I like what the stock's all about in the space, and the symbol is LVGO, and I was in it from 22 and sold at 32, and now but with a very small amount, but I'm looking to maybe put more in and leave it run. And that being said, I heard your previous segment about not wanting to buy Walmart. This would fit in the theme of this new stay-at-home model. Do you feel like there are stocks that will go against a trend of a downward moving market?
Sure. Oh, sure, absolutely. Now, got to just put this in context too. John was looking for a long-term trade in Walmart versus, let's say, just a trade, and so that therefore took on a little bit different analyses, if you will. But do me a favor, Tony, hold on through this break. We'll come back. We'll take a look at Livongo Health, Inc., which completed an A to B equals C to yesterday, so there should be more of a pullback. But let's take a look at that when we get back from this break.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back. So Tony, Livongo on his daily chart, it made a A to B equals CD pattern. The A point was down on March 16th. The B point was the high on March 30th. And then a small retracement, a couple of 2-day knee-jerk reaction on April 2nd. And the reason why it completed, why I say completed a to B equals CD pattern was because of yesterday's bar, which was a bearish reversal candle called the dark cloud cover. So this suggests that just simply from a retracement standpoint, typically in A to B equals CD patterns, they'll pull back to either the 0.382 or 0.618 retracement. Those figures, because you're looking for potential entry points, you'd keep your eyes on the 32.12 2720 or 2706 area. Now, before price gets there, what price is likely to do is test my little green line, my oscillator unchanged line. It's currently priced at 34.34. If price pulls back and tests and rejects that, then what we will likely see is price go back up to try to retest its high. If price closes below that, that's what then tells us about price pulling back further to the other levels that I had provided to you. Does that make sense, or does that help you out? Uh-oh. Did we lose?
If I'm trying, I don't need to necessarily time the exact right moment. Where would, if I start trying to scale in between all those numbers, where would you say, hey, this thing is not going, and it's just time to exit altogether? In other words, I don't want to. I may ease into it, and then it's either going to grab and go, or this run was just done. So if I start to move into it, and obviously 27 would be the low of that, if it goes below, what would you just stop out and walk away from the stock altogether at if I start trying to work my way into another position here?
So I'd say probably 34.20. If you see price get there and test it and reject it, then you could scale in. If it closes below that, then the first scale in area would be about 32.20. But I'd really need to take a look at volume as price is pulling back there to tell you whether that would even be the correct place. And I apologize.
And is there a number that is just a walk away altogether? It just, in other words, this was just a
send me an email. Send me an email.
Kind of thing. I just can't tell if it's
Tony, send me an email if you will, because we're off the air in about 2 seconds. Hey, folks, have a fantastic weekend, fantastic Friday.